Why don't most property investors succeed, especially since there's so much information out there and so many people out there willing to help them? Well, today I've got 3 separate segments that I want to share with you that are going to help you understand why many investors don't succeed, but of course the intention of that is to help you even the odds in your favour to make sure that you are going to succeed. I'm going to share with you probably the worst investment mistake I made, but it turned out to be one of the best investment lessons I made. It was a mistake I made early in my career when I lost 100% of my equity. Boy, was it an expensive mistake and a blow to my ego. I guess it shows that I didn't start off as a successful investor. There are some lessons in that alone. I'm also going to share with you a discussion I had with Joseph, my hairdresser, who learned how to invest like the pros. Now, isn't that something you'd like to know, how to invest like the professionals? Well, I'm going to share that with you, and then in my mindset moment, I'll help you understand that I'm a real success at failure. So, lots about success and failure in today's show, but the intention of it is to make you a more successful property investor or in all areas of your life. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
I was having my hair cut the other day when Joseph, my barber, and his salon is underneath our offices here in Brighton, he said to me, Michael, I'm going to finally get into property investing. I'm going to make a fortune because I've learned how to invest like the pros. Now, each time I visit Joseph, the conversation seems to revolve around property, but when I heard him say he's learned how to invest like the pros, I was concerned. Now, I know Joseph's been reading every book on property he could get his hands on, listening to all the podcasts, watching all the free YouTube videos. I also know that while Joseph enjoys his job, he's sick of the rat race and trading his time for dollars. He's looking for a level of financial freedom, and he told me that he feels he's missed out on that last property boom a couple of years ago, so he wanted to make up for lost time and get in this property cycle. But he hasn't got much time left because he's getting on in years, so he wants to get rich quick. Now, in the past, we've discussed property, but every time we have, and I've known Joseph for years, he was scared to take on more debt. He was scared to get in the market. Instead, he paid down the mortgage on his home, and now he's got no mortgage against it. Now, while he has the so-called security of minimal debt, almost no debt on his home, he feels he's got to catch up with many of his friends who took the plunge into property a few years ago, and they now own a number of investment properties, and they're slowly working their way out of the rat race. I remember when the property markets were a bit quiet before they started picking up, I recommended to Joseph he should be using the equity in his home to get into property investment. But at the time, all the pessimists were in the media. Remember all those negative messages last year? And that held him back. But now, armed with his newfound knowledge, Joseph was feeling confident enough to finally take the plunge into property. So when Joseph told me he now knows how to invest like the pros, I had to ask, didn't I? Okay, how are you going to do it? Easy, he said. I received this email and I've signed up for a course. And then he showed me on his iPhone the email he got that attracted his attention. It promised the ability to control millions of dollars worth of property with none of your own money and bypassing the banks. It also explained how the course presenter had made hundreds of thousands of dollars in just 7 days. And at that point, I felt sorry for Joseph and for the thousands of novice investors and some experienced ones, those property investors who will be taken by the new breed of property spruikers who are once again out in force. That happens every time when the property markets boom like they are now. Now, sure, those promises sound enticing. The opportunity of getting a life-altering fortune overnight by barely tapping the easy button as you breeze en route in your deck chair on the beach. But why did the guy take 7 days to make those hundreds of thousands of dollars? Why didn't he make them in 7 hours or 7 minutes? Now, of course, I'm being sarcastic. You can't become wealthy in 7 days, and you probably couldn't even read the course material in 7 days. But just look at some of the ads that you're seeing. They're coming up on the social media. We'll teach you how to buy a property to renovate and sell for a profit. A great replacement for your job. Of course, they don't explain about how after paying tax and GST and stamp duty on purchasing the property and on the next property, you're likely to be left with very little, if any, profit. Then there's the courses that in the past used to teach you how to buy properties with option, very little money down. The problem is this nonsense that you should expect childlessly simple microwave instant solutions to complex opportunities, and when you don't find them in one place, you rush off to the next pretender peddling it. That's what's stopping the average Australian ever becoming wealthy through property investment. The idea that an instant, simple and easy way has suddenly risen up from being laughed at and ridiculed to being the expectation today and the entitlement of a new generation of investors. That worries me. So here's what the real pros know. You can't create wealth through property overnight, but you can certainly become very rich in the medium to long term by knuckling down and seriously applying yourself in a dedicated, disciplined, persistent way. And you get there by following a proven system and by having a safe property and finance strategy. So it all starts with knowing where you want to end up and putting a strategic plan in place to get there. And then you implement that plan bit by bit, buying the right property in the right location at the right price and holding it for the long term. Not by adding hot water to a packet of magic beans and counting to 7. Yes, you can and should accelerate the process by learning the strategies of adding value through renovations or development, but you can't skip the fundamental process. While property spruikers are out there now, remember, they actually went quiet during the real estate downturn, didn't they? But unfortunately, this new property cycle is bringing out a fresh group of what I call property pretenders. And now they're property experts. They're out there selling advice and courses despite having never really built their own property portfolio. Gee, it's easy to do. It's easy to get a good website up, and a lot of them are now doing podcasts as well, just like that new wave of buyer's agents. And look, I'm not saying the buyer's agents are dishonest, but they're enthusiastic amateurs without the experience to help you. Now, many of those so-called property experts, the property pretenders as I call them, they're dangerous. You see, it makes it important for me to remind you that those sort of webinars and those sort of podcasts promising easy wealth through property have in the past led a lot of people to financial ruin. I've been around long enough to see it. This is just the cycle repeating itself. Now, I remember when I first conducted property seminars way back in the early 2000s. It was around 2000 and 2001. I had to compete with unrealistic promises of somebody called Henry Kay, who caused 13,000 consumers to lose around $60 million worth of money of their funds at that time, way back then, 20 years ago, after attending his seminars. Now, to be clear and reconcile my position, I have, been conducting educational seminars for around 20 years. Well, that's until coronavirus stopped live seminars. But I'm now teaching people through my podcast, through my videos, through my webinars. But I don't have any properties for sale at the back of the room, and I'm not paid to make a particular property developer's project look favourable, and I don't and I never have promised instant riches. Sure, I sell the services of my team of property professionals at Metropole, but they're independent, they're unbiased, and that's an important differentiating factor. So if you're going to listen to somebody's advice, make sure it's somebody who's unbiased, that the advice isn't self-serving. Be even more cautious if people are willing to offer you advice for free, and especially if it sounds too good to be true, because it most likely is. Making things worse today is the internet and the mindset it's produced, which puts born yesterday pretenders and academic theorists on the same footing with long-established experts who painstakingly amassed their knowledge and have proven it over time in the real world. It's just that some people are in too much of a hurry. What's happened is that their haste to hitch onto this new property boom we're experiencing has meant that many beginning investors has chosen to devalue credibility in favour of believability. Now let me explain the difference. Credibility requires education, experience, track record and proof of value. All things produced by an investment in time. On the other hand, believability requires only the ability to create belief. And that's so much easier to do today with a fancy website, maybe a glossy brochure, and a podcast or a YouTube video. All this sounds too good to be true, doesn't it? Of course it does. So what can Joseph and other property investors learn from what's happened in previous property cycles? Or are they just going to be doomed to repeat the same thing that all those failed investors did? So my suggestion to you is to educate yourself and become financially fluent. But please be careful who you listen to, who you learn from. As I already explained, find a credible source, not somebody with incredible promises, because this is going to allow you to control your own financial destiny. Of course, it doesn't mean you should do it on your own. Become a successful investor, you're going to need to surround yourself with a team of independent and unbiased professionals, a team who are known, proven and trusted. Then go ahead and take advantage of the current property cycle, because the future is bright for those who invest sensibly in property. So what are you going to do about it? If you want to take advantage of the opportunities of our property markets that are booming in front of our eyes, it's a good time to consider your options. It's a good time to set yourself up for the opportunities, and you can definitely trust our team at Metropole to provide you with direction, guidance and results, because not all properties are going to increase in value at the same level, and a lot of investors are making mistakes at the moment, taking shortcuts, cutting corners, missing out due diligence because of FOMO, being scared the market's moving too fast for them. And we need to help you. We need to even the odds. So why not have a chat with my award-winning team at Metropole? Just go to metropole.com.au. We help beginning investors get into the market, experienced investors move to the next level, and advanced investors become armchair property developers. But we've never sold any property, and we're not going to. And we've won multiple awards. This year we've won another one. So for the last 4 years in a row, we've won the awards as Australia's leading property investment advisors. And we give holistic approach, all starting with a plan. So go to metropole.com.au, and I'd love to be part of your wealth creation journey. Now, a moment ago I mentioned to you about the importance of getting a good team around you and investing like the professionals do. But I wasn't always a successful property investor, so I'd now like to have a bit of a chat with you about my worst investment loss. One of my early investments was in fact a complete loss. I know that doesn't make for ego-pleasing conversation for somebody who's meant to be an investment expert, but it's the truth. However, I want to tell you the story of how I lost 100% of my invested capital many years ago, way back in the 1970s, and the investment mistakes that I made that created this disastrous results. But first, I want to explain 2 reasons why I'm sharing the story. Firstly, losing investments can be great teachers. You're not only going to learn from the investment mistakes you made, but you can also learn from other people's investment errors. So it means that if you learn from me and these podcasts, you're not going to have to make the same mistakes yourself. Most investors pay the market a huge learning fee in the way of making mistakes. I've explained to you often that 50% of those who buy an investment property sell up in the first 5 years. Clearly they've done something wrong. And then most investors who stay in the game just don't make it past their first or second property, so clearly they're not doing things right. So why not learn how to avoid their common mistakes? The second reason I want to share this lesson with you today is losses are natural and a normal result of making investment decisions. So don't be so hard on yourself when things don't go as planned, because the key to long-term success is what you do when this occurs, when things go wrong, the lessons you learn from your mistakes, things you do so that you don't repeat them. The problem is many investors just seem to keep repeating the same bad investment behaviours. So here's the story of my biggest investment mistake, where I lost 100% of my investment capital. Now, go ahead and laugh at the foolishness. Yes, I should have known better. You see, I already owned a few investment properties at the time, but I was in a hurry to get rich quick. Interestingly, this story is good evidence that I wasn't born a great investor. Investment is a learned skill, so I hope the lessons that are contained in the story I'm going to share with you are going to help you avoid the mistakes I made. You see, I was offered an opportunity to invest in a gold mine. I still remember it well. In fact, one of my friends, Brian, had invested the vast sum of $5,000. Now, remember, this was in the early 1970s, or middle 1970s, so that was a lot of money. He invested it in a venture that was resurrecting an old, disused gold mine in Wedderburn near Ballarat in Victoria. Of course, my initial reaction to Brian was to tell him how silly he was, how he was going to lose money. But Brian asked me to speak to the promoter, explaining that he'd tell a compelling story. So I did. In fact, I still remember it well. I can picture it in my mind's eye. It was on a Sunday morning when a man called Terry came into our home and described how, with the price of gold rising at the time and new technology that was now available, it was viable to reopen old disused gold mines, and he'd selected one he had the rights to one in Ballarat where the gold rush occurred in the 1800s. He had budgets and profit projections and diagrams and plans, but the things changed completely when he was sitting there in my dining room at the dining room table. It changed completely when he took a shiny nugget of gold out of his pocket and placed it in my hand. I'd never seen real gold, or not a gold nugget like that before. And he told a compelling story of how it could double my money, my investment quickly in his company. I still remember the name, the Asian Pacific Mining Corporation. Boy, what an impressive name. And how I would receive dividends for years. And my greed glands began working overtime as I swallowed his story. Hook, line and sinker. The end result was I also invested $5,000 of my money. And of course, I lost it all. Now, just to put things in perspective, in those days, the family car, which was a Holden Kingswood, which was sort of a bit equivalent to a Commodore, a mid-sized car, cost around $2,000. So $5,000 was a lot of money. What happened was that my money and that of all the other investors was squandered by Terry's frivolous startup costs. It meant nothing was left to invest in the mine. He took the money, he absconded with it. Now, I know at the time the police looked into it, but no one ever got any of their money back. So my investment decision was one big mistake after the other right from the beginning. Here are some of the obvious mistakes I made with this investment. First of all, I gave my money to a virtual stranger without doing enough due diligence. Sure, my friend Brian and a few other people I knew had invested with him, but I didn't look into the opportunity enough. Of course, it was much harder to do that back then. There was no internet. The second mistake I made was I invested in something I didn't understand. The third one was I bought the story rather than the investment fundamentals. And boy, was Terry a good storyteller. The next mistake was I was lured by the opportunity of making quick money. I was in a hurry. I wanted to get there fast. In reality, I was speculating, not investing, and I risked my money. And in fact, it was money I couldn't afford to lose at the time. And one of the other big lessons was, or mistakes, was really that I had no investment strategy. I had just had a desire to get rich quick. And investing in gold or Bitcoin or property, that's not a strategy. So I learned many lessons from this experience, including not everything that glistens is gold. I learned that sometimes your best investments are the ones you don't make. I've made more money since then by not saying yes to opportunities than by saying yes. I also learned don't invest in anything you don't fully understand. I knew nothing about gold mines, so I was speculating rather than investing. I had no competitive advantage. There was no mathematical expectation to my investment strategy. One of the worst things that can happen to an investor is to get it right first time. I'd been successful already in property investment, so I thought I was smarter than I was, when in reality my investment success was far from my own success. It was in a large part due to a booming, a rising property market, a boom that made me look much smarter than I really was. The other lesson I learned from this experience was don't become overconfident because the market will soon humble you. And another lesson I didn't understand at the time was the incentives that so-called advisors had, advisors who really had a vested interest, which creates bias in the recommendations they give you. I could add even more mistakes to this list, but I think you get the point. Looking back, one other mistake I should mention that occurs after every event was blaming other outside factors for my investment failures, rather than evaluating what really happened and owning up to my own failure. Now, looking back, this mistake was a big blow to my ego. I had to explain the loss to my then wife. It was embarrassing, but it provided me with the opportunity to learn some great lessons. So my question for you today is, how many of the above investment mistakes are you making? How much are your mistakes like this costing you? One of the key factors to my investment success is that I always try and learn from my mistakes. In my early years of investing, I tried to constantly improve my investment skills by studying each loss, examining an investment that didn't perform as well as it should have, to understand what was wrong with my strategy, and then I set up disciplines to ensure that I didn't make the same mistake again. And that's why when we help our clients at Metropole, we start by putting a strategic plan together, and it's one that involves time-tested, proven strategies, such as my top-down approach and my six-stranded strategic approach to finding the right property. So in retrospect, my worst investment mistake was a cheap lesson. This lesson was the first of many, many learning fees I've paid to the market over the years. I've made lots of mistakes and I've paid lots of learning fees during my journey to investment success. It's much easier for investors nowadays. You don't need to do it all on your own. There are very many good, independent property strategists out there to help you. But that wasn't the case when I first started investing. Unfortunately, there are still many sharks out there too. Maybe they don't have the unethical intentions Terry had, but they still have vested interests. They represent builders and developers, but they're disguising themselves as advisors or buyer's agents when they're really representing somebody else and not you. I only just heard about that recently. Somebody who I thought was an independent mortgage broker and ran a podcast was giving good advice, but interestingly, he was directing his clients to what I would call not investment grade properties in the wrong locations and being built by new developers. And I'm not sure that he actually got a bonus from it, an incentive from it, but I can't imagine why else he'd be advising people to go to those locations. So what about you? What can you learn from my story? Are you making mistakes? Are you using any of them as excuses to dismiss your investment loss and not reflecting a fundamental flaw in your strategy? So as I said at the beginning of this chat, every property investor makes mistakes. They're a normal part of your investment journey. But to minimize them and to maximize your investment returns, you need to treat your property investments like a business and critically evaluate your property's performance. Too often I see investors holding an underperforming property in the hope that one day it's going to become good. So they say, oh sure, look, this property is going to go up in value. It's not costing me anything, it's washing its face. Wrong. What they're losing out on is the opportunity cost, the opportunity of owning better properties. You see, if you can only own, 3 or 4 properties, then you've got to own the best 3 or 4 properties you can afford. Accept responsibility for how your investments are performing and figure out what it is that's making them underperform if they are, so you can rectify the issues or avoid the same errors in the future. Taking self-responsibility for your investment performance is the first step in improving your investment strategy so you can become a consistently profitable investor. So remember, nobody starts out as a great investor. Property investment, it's a learned skill. You now have indisputable proof that I began life as an investment sucker. Few people have made more mistakes in their journey than I have. In fact, I've often said I'm a real success at failure. Yet I'm a successful investor today, and it's largely because I've learned from my mistakes. So I hope you're also going to learn something from my mistake. So what should you do? Well, as I mentioned earlier in this podcast, I'd love to help you. You should be speaking with somebody who's walked the path and knows where the landmines are so that you don't tread on them. And that's what my team at Metropole can do to help you. We don't sell property, and we have offices in all the big capital cities, our own buyers agents team there as well. So therefore, we don't fly in and fly out. We're experienced. We're not enthusiastic amateurs. We've won multiple awards. So go to metropole.com.au, find out a bit about what we do, whether you're a beginning investor, an experienced investor, or a high net worth investor. We've got services to help you, including strategic property advice, wealth advisory, financial planning, renovations, development and property management. Go to metropole.com.au and I look forward to being part of your journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I want to talk a bit about failure. Now, I know this podcast is about success, and it's interesting how in the mindset messages I talk about failure a bit. But if you're honest, you're going to fail. We've all failed. We're all going to have problems. We're all going to do things that don't work out. So let's start with the truth. In life, you are going to fail. A lot. In fact, if you don't fail, you'll never reach the level of success that you're capable of attaining. Talk to any successful person, somebody who's not trying to sell you one of those get-rich-quick schemes, and they're going to tell you that they've failed often. In fact, they're likely to say, I've failed way more than I've succeeded. I remember reading Michael Jordan, the famous basketball player, saying, I've missed more than 9,000 shots in my career. I've lost almost 300 games, 26 times. I've been trusted to take the game-winning shot, and I've missed. I've failed over and over and over again in my life, and that's why I succeed. Now, we could go on and on about these sort of quotes because they're the truth. But what's sad is that many people believe if they fail, they're a failure. No, the only failure is in giving up. Of course, this doesn't mean keep beating yourself about the head when something doesn't work out. It means you've got to adjust and keep moving forward to the destination that you've set for yourself. Notice I didn't say to change your destination. I said to adjust your plan. So here's the counterintuitive key to success. Fail forward fast. If you're struggling right now because you've experienced a set of setbacks, dust yourself off and get back at it. One step closer to getting where you want to be. That's what's going to happen. And if you're riding a wave of success and you haven't failed at anything recently, ask yourself if you've become complacent or maybe a little bit afraid. Maybe you're afraid to stretch your boundaries or to try something new. Maybe you're doing that because you're worried about the possibility of it not working. So as I've often said, I'm a real success at failure. And so should you be. Keep getting up one more time and you'll be ahead of the game. I hope you got some benefit from today's show. And if you know somebody else who'd get benefit from it, why not tell them about the Michael Yardney podcast, either using the share button on the podcast app or just tell people about it or tell the world by leaving a review. If you want more information about success, property investment and money, why not go to podcastbonus.com.au, leave your details and I'll give you a wide range of ebooks to add to your success library. Podcastbonus.com.au, I'll leave a link in the show notes. In between these twice weekly podcasts, you can catch me on social media. Just look for Michael Yardney. And there's a private Facebook group where every day I leave special information that I don't share elsewhere. Just look for the Property Update private Facebook group, and I'd love to be part of your wealth creation journey. Catch up with you real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?